Let's give you the markets update now, and the JSE All-Share Index gaining ground, closing at about 1.3% up, mainly driven by industrials, financials and resources-linked sectors. Meanwhile, investors continue to assess the outlook for interest rates from speeches of major central bank policymakers, while also keeping a close watch on the economic data and corporate reports. Let's speak now to the head of foreign exchange execution at Rand Merchant Bank, Matete Thulare, joining us for a quick markets analysis. Mr. Thulare, good morning to you. Let's begin with the Rand, which seems to be trading slightly better in early trade.
Good morning, Collie. Yeah, look, the Rand yesterday falling by nearly 1% on the back of the dollar strength that we saw for the third day in a row, especially after some U.S. Fed policymakers left the door for further rate hikes. Now, the market has been gripped by tension yesterday as we really are waiting for clues on the outlook of interest rates after, we're expecting quite a number of central bank officials, including U.S. Fed Chair Jay Powell, who's going to be speaking about the futures, the policy in terms of whether interest rates are still going to go higher or obviously they're still going to be holding. That's going to be later this evening. Now, the sentiment across the market has been that the Fed will increase rates for one last time before the year end with another base at 25 basis points, which obviously is driving the sell-off in the risk-off environment. This is why you're seeing this dollar strength. I mean, after last week's dovish stance from there, and obviously the disappointing jobs report that saw the dollar, touching multi-week lows, and obviously the Rand also touching 18.20 last week. Fed officials have been working hard to reset expectations, talking tough and obviously reopening the door for further rate hikes. Now, with inflation still far from the Fed's 2% target, the last thing that Jerome Powell and his peers will want is the slump of the dollar. He is scheduled to speak in public later this afternoon, and I think should he choose to adopt a hawkish tone, then that might lead to some dollar strength and obviously, see the Rand slightly weaken. But as we say, it's a wait-and-see approach, and obviously we wait to see what the central bank governors say over the next few weeks.
Let's talk oil prices steadying this morning, whilst at the same time looking for further clues on the status of demand. Your quick sense of the market sentiment there?
Quite an interesting one there. I mean, from an oil perspective, yes, we've seen oil, extending some of the declines. Obviously, we know the market is digesting quite a lot of indicators of weakening demand and obviously some clues from the Fed in terms of whether interest rates are going higher or lower. We've seen, oil prices dipping by more than 2% on an intraday basis, touching below $80 a barrel for the first time since July. Now, the risk premium that we've seen from the geopolitical tension in the Middle East, that has faded somewhat in the past couple of weeks. I think now the market's focus has shifted towards the demand, which has seen, some signs of softening, especially from China. I mean, that is the world's biggest crude importer, and obviously the refining margins there, they're shrinking, and oil and fuel stockpiles are also swelling. And also another factor is the fact that air travel has still yet to rebound. So even when you just look at the economic data from China, that has further soured the mood and contributed to yesterday's sharp falls. And I think from a Rand perspective and a South African perspective, the more we see a steadier oil price below $80 a barrel, and obviously with the Rand around this 18.50, potentially we will have another petrol price decrease at the start of December.
Let's then talk about parastatal Transnet and its plans to ask its lenders for a further reprieve on a big chunk of debt that is due just next month. And this is all in an effort to try and avoid a messy default, but also importantly, the potential bankruptcy. How are the markets digesting this?
Yeah, look, Transnet, we know the issues there. They've rolled over 7 billion rands worth of debt that was due this week. They've rolled this up until March, giving, the state-owned enterprise a relief for another 4 months. Now, in terms of the refinancing the debt that has, become repayable this November, what it just means is that they've applied for new debt and they're using and replacing the existing and outstanding debt that they have at the moment to negotiate for new repayment terms. Now,
All right, I think
PIC, which manages the bulk of, has about 4.4 billion bonds.
Apologies to you, Matete. We seemed to have lost connection to you there, but help us conclude just that last bit that you were going to say about Transnet before we close the conversation.
Yeah, so sorry about that. I mean, yes, Transnet, they've refinanced the debt that's become due for repayment in early November now. What just this means is just that the new debt and obviously what they're replacing the existing debt and outstanding debt that they have at this point in time, they're going to be renegotiating new payment terms. And I think if you just look at the likes of the PIC, which manages government employees pension funds and has about 4.4 billion rands of Transnet bonds, they're rolling over these exposures into new commercial paper that will be maturing in March. And I mean, if you just look at also what the finance minister said just a week ago, I mean, he did make sure that there's no provision for Transnet in his medium-term budget policy statement, despite a last-minute bid by the company to obviously have a bailout. And what's also interesting is the fact that this will worsen Transnet's debt position. I mean, this is set at about 130 billion rand. Now, this will result in the company paying interest of around 1 billion rand every month in interest costs. Now, although refinancing a big portion of this debt has bought Transnet more time to pay off their debt at a later stage, I mean, the company will now face higher repayment costs of the new debt, given the fact that interest rates have risen dramatically over the past year as well.
Yeah, let's conclude the conversation with Outsurance confirming the sale of its underperforming investment unit. It's called Outvest to Financial Services Group. Alex Forbes, your sense of the specs of this deal?
Quite an interesting one from an insurance perspective. I mean, Outsurance, yes, they've confirmed the sale of their underperforming investment unit, which is called Outvest. They're selling this to Alexander Forbes. They did hint at this deal already in August as part of their strategic review. Now, if you just look at Outsurance, they're valued at around 64 billion rand on the JSE, whilst the likes of Alex Forbes, it is valued at around 8.5 billion. Now, they've confirmed this deal, and neither party has disclosed the amounts. Now, Alex Forbes, as part of this deal, they'll take full control of Outvest, which was launched in 2017 to distribute wealth products via, direct and intermediate channels, such as websites and an app, to a wide array of customers to obviously help them reach their financial goals. Now, the effectiveness of the deal has obviously still need to go through some regulation, and this is expected to be closed in March 2024. Alex Forbes coming out to say that this helps them accelerate their digital journey and supports them in transforming into becoming, one of the most impactful providers to retirement fund members. So quite an interesting deal, and I think once it's closed in March 2024, come December 2024, I think that's when we'll really see the impact from an Alex Forbes, and obviously how it also matches to their strategic reviews.
Matete Thulare, Head of Foreign Exchange Execution at Rand Merchant Bank, thank you very much for that markets update.